Hello and welcome to another brand new episode of What the FinTech, the podcast from the team behind FinTech Futures and the Banking Technology magazine. My name is Paul Hindle, editor of FinTech Futures, and for this episode, we're joined by Andy Lowe, EMEA Head of Business Development for Technology at Bank of America. Andy, welcome to the show.
Thank you very much. Pleased to be here.
Thanks so much. Great to have you here. And just to get started, we'd like to quickly let us know a bit more about yourself then.
Yeah, sure. So Andy Lowe, I've been working in technology and banking since the mid-90s, around 97. So I've been at Bank of America since 2008 in various roles for the last 9 or so years in my current role, working in the technology partnership development team. Prior to here, JP Morgan from 97 through to 2009 on and off. And then prior to that, I studied astrophysics and I have an engineering degree from university. So I was more on the kind of engineering and science side rather than technology per se.
Excellent. Sounds great. And again, great to have you here. And thanks so much for taking the time out to speak with us today. So on the show this week, we'll be discussing digital innovation and technology trends in the financial services sector and the importance for banks of striking a healthy balance between in-house creation and collaboration with fintech partners to keep up with the rapid rate of digital change and increasing competition. In particular, we'll look to discuss Bank of America's own tech innovation and development strategy, as well as learn more about the company's role in the FinTech Innovation Lab program, which was hosted recently in London and sees the bank provide guidance to a group of fintech startups to help them develop and scale their businesses. That's all to come shortly, but as always, we will open with our news and numbers segment. This is where our guest has gone out and found a news story featuring an interesting number to discuss and get us started. So, Andy, what have you brought along for us today?
Well, in terms of numbers, I always find the amount we spend on technology quite staggering. For example, our CEO, Brian Moynihan, was recently interviewed by an Italian newspaper, Il Sole, and he said that the bank spends around $12 billion a year on technology, of which 3.8 is allocated to new initiatives. And to put that in perspective, as I find it quite difficult to relate to these large numbers, $12 billion is around the same as a GDP of a country like Namibia or Chad. It's quite a staggering number.
Yeah, that is a huge number. I mean, other than obviously what that says about the size of Bank of America itself, I mean, what do you think that says then when it comes to your tech innovation and development strategy then? And how is the bank looking to deploy that investment?
Well, maybe it would help with a bit of context. I work in a small niche team of 15 people here at the bank called Technology Partnership Development, led by Tom Mildenhall out of Palo Alto. And our primary function is to find and evaluate emerging technologies for the firm. So day in, day out, we're meeting startups and spending time with the investment community to keep abreast of new capabilities being developed. And our role is to match these new capabilities to real world business cases across any of the 8 lines of business at the firm, while they're supporting technology functions. Therefore, supporting the program you mentioned before, Accenture's FinTech program, is completely natural for us to do. And although our goals are less about expecting to find a company we could bring on as a vendor, they're more about us supporting the emerging tech ecosystem as a whole.
So you've mentioned that you recently hosted the annual FinTech Innovation Lab program then down in London. Can you tell us a bit more about that then and your goals there?
It's the 11th consecutive year we've been participating in London. It's a perennial event, helps carefully selected fintechs at early to growth stage to develop and scale their businesses so they're appropriate for the market. And through mentoring and one-to-one conversations, we support them. It also helps with the ongoing strength of the London fintech landscape and emerging innovation space. It forms part of the Accenture FinTech Innovation Lab, which is a premier global program of which the bank's been an active participant since its inception.
So you mentioned this is the 11th iteration now of the program. So what were the driving forces behind that initial decision to get involved with that?
Well, we've been involved from the start when it kicked off in New York in 2010, before I joined the team. In New York, it's run with the Partnership Fund for New York City and Accenture. It was established to solidify New York as the main hub for financial capital by leveraging the concentration of financial institutions and expertise in New York. And the London program was launched a couple of years later in 2012. And this year it has over 300 applicants from 15 different countries. So it's certainly grown and developed over those years.
Excellent. So what would you say then are the benefits for participants and what do they get out of taking part in the program?
Well, those 300 applicants were whittled down to a cohort of just 15 in London this year. So it's super competitive for a start. Meaning just getting a place in the program is a badge of honor and gives credibility. Secondly, from the access the founders get to industry experts, they get to learn from both in terms of the mentors that support the program, as well as the staff and the financial and insurance companies. I'd say one of the key benefits for the participating fintechs is the swift validation they receive on whether their business is of value and realistically achievable in the industry. This can save months and years of banging on doors, trying to find the right people to pitch their ideas to. Also, by having so many different companies involved, participants have an opportunity to hear a consistent message across a variety of sources, not just one company's view.
Yeah, you mentioned there, obviously, the sheer number of fintechs wanting to get involved. I mean, in general, how difficult is it for fintech startups at the moment, given the tough macroeconomic conditions and the funding environment as well?
Well, I'd say it's always difficult for startups at any time, to be fair. But the current economic conditions, as you allude to, are even more tough, especially, as I'd say, in the UK versus the US right now. But that's why it's even more important to provide support and validation to these companies early in their journeys. Our support and validation of a fintech's business model can influence the venture capital community, as they are more likely to take notice and invest in the fintech.
Excellent. And what are some of the success stories then to come out of this program then over the last few years?
Well, as mentioned earlier, we don't primarily support the program with an expectation of finding companies we can work with, but there are many examples of companies that have come through the program and gone on to be very successful working with the financial industry at large. There was one fintech that came through the London lab in 2015. They worked on a proof of concept, which went really well. However, the key stakeholders in that space were located in the US. So we advised the fintech to join the New York lab the following year. Their networks and relationship in New York grew, and they were able to demonstrate their value to key decision makers in their field. Shortly after, Bank of America started partnering with them, and we've helped them expand their footprint into different parts of finance. Also, just last year, one of the companies from the cohort is also starting a POC in EMEA this week, actually, which is really exciting in the ESG space. So looking forward to seeing how that develops.
Looking at this year's cohort, then, what kind of technologies or use cases really caught your eye?
Well, unsurprisingly, this year there have been quite a few companies exploring the Gen AI space. Certainly a new interesting area of technology the whole world's aware of, but that all of us in the financial industry are exploring and trying to figure out what business use cases that can be safely deployed. And it's really great to have these companies pitch their business cases and ideas and then discuss them at our event with a cross-section of experts in different areas of B of A. This way we can share the experience we have as a regulated bank and collaborate with them, whether some of these new ideas and platforms and applications could help the financial world move forward.
And obviously we've got kind of benefits for the companies involved covered, but then what are the benefits then for B of A kind of participating in this FinTech Lab program, and how does it fit into your wider kind of innovation and development strategy?
Yeah, good question. Bank of America regularly brings diverse minds together, carefully curated events such as the FinTech Innovation Lab. I think the firm belief is that the bank's innovation culture starts with its employees. And if they have the freedom to think to the future and create new tech ideas, it will bring huge benefits to our clients. B of A doesn't just simply opt for investing in startups or running tech incubators. The strategy's always been about partnerships. By all the parties sharing the challenges we're facing and the priorities that we're working towards, we can find ways to collaborate and find holistic tech solutions to solve.
Excellent. And obviously, we started the show mentioning how much B of A has been spending on its tech side of things. There was the announcement earlier this year as well that B of A has increased its number of patents by nearly 70% in the last 5 years. How important is that to keep that internal development going then alongside, as we've been talking about, tapping into those fintech partnerships as well, given the speed of technological change and rapidly evolving customer expectations at the moment? How do you strike a balance between the two?
Yeah, sure. Well, when it comes to technology, large companies are always considering the build versus buy question. That is, what do you develop technology in-house versus buy a complete system off the shelf and plug it in, or even build a platform yourself and include third-party software as part of the system? The answer is always depends on what will bring the most benefit but it's always about what solution will bring the most benefit to the end customer. When thinking about internal development, the bank's philosophy has always been that patents are a unique and purposeful tool. And this mindset helps us to really encourage the organization to think about innovation, not just as an activity done once a year in a workroom, but as part of every day. It's really everybody's job to think about innovation at the bank. And we don't have a singular kind of innovation lab or just one innovation team. We encourage the commitment to innovation across the entire diverse workforce, ensuring all viewpoints are incorporated into our development to produce the best products and solutions for our clients, whilst also offering the stability and resilience they need.
Yeah, so you mentioned earlier that obviously generative AI has been one of the big talking points over the last year or so now. Is that something in particular that you've been looking at as well over at B of A, or are there any other particular tech innovations or development areas that you've been focusing on?
We look at all sorts of technology, and I often get asked in my day-to-day job, what's our team focused on? What are we looking at? And honestly, I feel when it comes to innovation, you have to have an open mind to listen and learn to new ideas without a specific vision of what's required and certainly what good looks like. And that way you allow for serendipity and opportunity to play a part. If I had 100% clear view of what the technology should be, what the answer should look like, then it almost certainly wouldn't allow for innovation to manifest. But as a specific example of a new development, utilizing some machine learning and AI, we recently made some enhancements to CashPro Chat, which is a virtual service advisor within the CashPro banking platform. And CashPro Chat now includes the same proprietary AI and machine learning capabilities behind Erica, which is our popular retail banking virtual financial assistant. So business clients can now experience the power of this advanced virtual assistant to quickly view transactions, find information about their accounts, and navigate CashPro functionality. And the virtual advisor will route more complex requests to specialized service teams to resolve as needed.
And back on the kind of partnership side of things, I mean, how would you say the relationship between fintechs and banks then has changed over the last decade? I mean, you always used to be, the discussion was around competition or partnerships, but it seems like partnerships has been a clear winner from that now, right?
Yeah, I mean, there's a lot of fintech firms in London, especially in the UK where I'm based, and indeed globally, but the relationship is far more collaborative than maybe 10 years or so ago. We can learn from each other. Global banks can help with the scale, security, client base, resources, and knowledge. And fintechs have that ability to solely focus on their chosen field of technology. Cooperation, not competition, is therefore definitely the common approach nowadays.
And looking forward as well, I mean, how do you see this collaborative bank and fintech sector evolving?
I think it'll be a never-ending evolutionary loop. In financial services, as more people require more sophisticated services, and the overall scale of it continues, there's more collaboration needed between tech firms and banks. Collaboration brings creativity, new ideas and initiatives. Through discussion, mentoring, and advice, we can help these young companies take the next steps in their journey. And we're excited to see where this pathway leads.
Thanks again, Andy, for chatting with us today. To close out the podcast, we have our now infamous FinTech Gels. This is where we ask for an industry term, buzzword, or trend that you've seen or heard enough of. Or, of course, you can advocate to free one of the previously incarcerated terms. So what would your selection be for this week?
It's a difficult choice because there's a number of words I could want to put into a gel, but I've gone for metaverse because I spent a lot of time looking at blockchain over the last 10, 12 years, and metaverse, I feel, is not a very helpful for this space. It's too ambiguous. It's often used to describe a variety of concepts ranging everything from virtual reality environments to interconnected digital spaces. And this ambiguity makes it really difficult to have clear discussions or make specific plans. And it also creates unrealistic expectations. The term tends to evoke visions of a fully immersive digital universe akin to science fiction. However, the current state of technology falls short of these grand expectations, leading to disappointment when the reality doesn't match the hype.
Yeah, I completely agree. There was definitely a lot of hype around it a couple of years ago. I mean, did Bank of America do any experimentation with the metaverse during those hype phases, or is it something you ever looked at seriously?
And Bank of America, if I remember correctly, had more patents than even MIT, but We do this to learn and to explore new technologies, not because we necessarily are rushing to deploy. We're very thoughtful and purposeful in deploying new technologies. It's important that we understand their capabilities. And to do that, we have a lot of experts within the bank and we develop a lot of IP. Often people can read that and add 2+2 and come out with 5. It's all about learning and developing and figuring out, has this got real business application? Can it be used in the right way, safely, and not cause a problem for our customers and clients in the longer run?
Yeah, no, I mean, it does feel like whatever hype there was around the metaverse certainly died off a bit now, especially with the rise of generative AI as well. It seems like it's certainly taking a back seat for now. So happy to throw this one in the jail, and maybe we can look to revisit this one later down the line if the use cases start to emerge again. But until then, Andy, thank you so much again for joining us for the podcast today. It's been a pleasure. Thank you very much, Paul. Thanks for having me. I've enjoyed it. Well, that's all we have time for this episode. Thanks, of course, to Andy for joining me. As for FinTech Futures, you can find us online at fintechfutures.com, on X at FinTech Futures, and of course on LinkedIn. If you like this podcast and our other episodes, you can subscribe on Apple Podcasts, Spotify, SoundCloud, or your favorite podcasting service to get notified about future episodes. Thanks as well to Arama for editing this podcast. You can check them out at arama.tv. As always, thank you very much for your support. We'll see you soon for another episode of What the FinTech. But until then, goodbye.